Many more of us who don't invest directly in the stock markets, we need to understand these stocks better because we invest in something called as mutual funds. And mutual funds are directly related to markets, as we all know, and related to stocks and sectors that they're invested in. And we have some very important piece of news that we want to give you. As we discuss the markets every day, but we don't often tell you how many people invest in mutual funds in this country. And now we understand with the latest data coming out that SIPs, or the systematic investment plans, through which we all invest small sums of money on a monthly basis, which has become the most attractive form of financial investment, if I may, in these extremely volatile times that we live in. SIPs, a crucial investment avenue. And SIP investments in India are at all-time record highs. In between all this volatility, all these issues, muted markets, muted IT pack, one thing that is not muted, investments, inflows into mutual funds, and specifically not the bulk mutual funds, but the systematic investment plan investments into those mutual funds. To help understand what exactly is going on over here, I have Kartik staying on with me. Kartik, please stay back. We also have Mr. Feroze Azeez, Deputy CEO, Anand Rathi Private Wealth Management, also joining us live on this broadcast. Feroze, thank you so much. As always, joy and a pleasure to have you here on the show. Look at those numbers, 16,000 odd crore rupees SIP inflows at record highs. This is for the month of September. If you can tell us, the first question on my mind is this: overall mutual fund inflows has gone down from August to September, but SIPs alone have gone up. So are you looking at a definitive shift in the way Indians are investing into mutual funds? Are they all overwhelmingly choosing the SIP route over bulk investments in mutual funds?
Yes, so there has been a 26% rise in the SIP number from the last 1 year perspective. See, what happens is when it looks at mutual fund as an investment, monthly numbers don't give us a trend. Because there could be outflows from HNIs which can skew the entire country's inflows and outflows. For example, in August, we saw 20,000 crores of inflow, which implies that 15,800 odd crores came from SIP. So lump sum investments were 4,200 crores, summing it up to 20,000 crores. Now this month we see the SIP number is greater than the total inflow, which implies that the lump sum monies went out to the extent of about 1,500, 2,000 crores. So every month-to-month basis, they don't speak so much, but at least the number which you pointed out, which is the SIP number, clearly stands out and shows a trend of a 26% growth in the last 1 year when it comes to money collection. I had actually predicted that it will reach 25,000 crores by FY26 end. I think that's going to happen sooner. You would be very surprised to know this number was just 800 crores per month in 2011. So we have come a long way. I think financialization, which as a concept we are speaking about, has not happened as much, but this subsequent decade, if I threw some numbers, Indian mutual fund as a total proportion of the Indian household savings, which is 670 lakh crore, Indian equity mutual fund is just about 4%. So financialization is not behind us, but ahead of us. And I think the next decade is going to be a paradigm shift in those proportions.
Absolutely. The one thing I want to ask you is that amongst all funds, we understand that the ETFs, the export traded funds, rallied the most in terms of inflows, up around 74%, if I'm not mistaken. Clearly, there is, are you looking at people choosing export traded funds over other kinds of funds?
So exchange traded funds have a large inflow. In exchange traded funds, largely ETFs are going to be driven by large corporate monies as well. Now, if you look at the largest investor in the ETFs, especially Nifty and Sensex, is the EPFO, Employee Provident Fund. So those numbers are going to be lopsided this way or that way. That does not represent the Indian individual investors' numbers so clearly, point one. Point two, seeing the inflows and outflows as a proportion of the last month's inflows and outflows could be a little misleading. Now, for example, on the large cap fund side, the number went up 68%. But if you look at, there was a minus 300 crores outflow in September from large cap. Now there's a 110%, 110 crore outflow in the month of September. Both are outflows, but there is 68% betterment. So I think seeing it as a proportion of the last month's inflow outflow could be a little deceiving, but you're absolutely right. There is been some degree of attraction of even individual investors to save cost and get into ETFs and not trust the fund manager, but use a passive strategy, which is what ETFs do. But yeah, very, very clear trend. But these numbers could be largely driven by large corporates or even EPF for
Okay.
that matter.
Hey Feroze, nice to see you after a very long time, and I hope we see you a little more often like we used to earlier. But thanks for joining us here today. I just wanted to understand from you. I mean, of course, big numbers there, and we are seeing massive 16,000 crore rupees worth of SIP investments. We are seeing the unique investors taking the mutual fund route of investments, touching 4 crore. 4 crore unique Indians are actually in the mutual fund, investment zone right now. But Feroze, my question to you really is that do you really attribute the 62,000 odd crores of AUM wipe off only to HNIs, or are we looking at Q1 selling and maybe that money being diverted to either bonds or other safer banking units, banking instruments, given the fact that there is volatility in the markets right now?
Or even gold for that matter.
Yeah.
Yes, if you look at it, I think generally this number, when you look at the total inflow, X the SIP number has been a very volatile number. And it has not been a trending number. Like this month, it is negative lump sum. And last month, it was 4,500 positive lump sum.
Yeah, but it comes at a
Can
time
I
that
conclude?
we are ending H1, and it seems like an opportune time for corporates also end of quarter, end of H1 to really look at readjusting their portfolio and parking money, because I don't think regular retail investors like us calculate it that way.
Absolutely, Kartik. I think you're so bang on. Individual investors don't think like that. Corporates can. But having said which, I think flight of capital to gold and debt. Debt, I think, especially on the mutual fund industry size, like you said, there are close to 4 crore equity fund investors. There are just about 57, 60 lakh debt fund investors. So debt funds have very little money of individual Indian investor.
Right.
Today we have 133 crore Aadhaar cards. We have 65 crore smartphones. We have 50 crores of people using health insurance and UPIs, but we have only 4 crore mutual fund investors. So I think we have a long way to go in terms of penetration. Even on e-commerce, we have 60 odd crore people
Fair enough.
shopping online. So.
Fair enough, Feroze.
So
Okay. The numbers don't tell us that, like, we need, with better penetration, we'll be able to get a better sense of the inflows into mutual funds as to which one is really a reflection of the common Indian investing into mutual
Krishna,
funds.
I'm very curious about one thing, and since Feroze mentioned don't look at data month on month, look at the trend line. If you look at the trend line, let's say April onwards, this entire first 6 months of the year, Feroze, we've seen that the outflow has largely been on account of large cap funds. I thought large cap funds, again, I mean, it seems counterintuitive. Large cap funds seem to be safer. The blue chips fall in large cap funds. They're just bigger brands that you know of, bigger companies that you know of. But April onwards, we've been seeing the large caps have been seeing outflows. But small and mid caps, while month on month they've declined, overall April onwards, we've still seen them in the positive territory.
And if I might add, I was talking about the ETF exchange traded funds, growing up by 74%. Look at the growth in hybrid funds. So there is a movement in a particular direction, even when they want to come to the mutual fund arena to invest, isn't it?
Yes. What has happened is, of course, we had given a buy call on small caps on 2nd January this year. There's been about 29% outperformance after that of the small cap Nifty small cap 250 index with respect to Nifty, which is a super normal outperformance. We last saw this kind of outperformance way back in 2017. The good part is the retail investors have invested in small cap thanks to the education which has happened over the last few years, especially post-COVID. We saw 7,000-8,000 crores come into small cap in February, March, if I remember right. That's the first time I have seen retail investor being ahead of the curve. I've always noticed over the last 18 years of my career looking at this data, retail investor is the last man standing. But this is the first time I saw retail investor through the mutual fund route entered small cap much before the full rally happened, and still the outperformance continues till today. So point one. Point two, large caps have had an exit, but if you try and marry that with data of how flexi caps have got money, which is also largely large cap, 80%, 70% of flexi cap funds have large stocks. What has been disappointing in the mutual fund categories specifically is large cap as a category has not been able to deliver alpha. But a flexi cap category or a multi cap category, which is skewed towards large cap, is able to generate that alpha without being labeled a large cap. I think that's one thing which has been a huge shift of capital.
Cool. That helps us understand it better. Flexi and hybrid funds, because movement away from large cap funds going into flexi.
It's all about the alpha.
It's all about the alpha. But Feroze Azeez, thank you so much for taking time out to share that piece of wisdom with us this afternoon here on Business Plus. Always a pleasure to have you, and we hope to keep having you again and again. But thank you so much for taking time out.